The Beetaloo Basin is being demonstrated to be one of the world's most prolific shale gas basins. It contains over 500 trillion cubic feet of gas in place.
Empire Energy Group, ASX EEG, is an energy explorer in the Northern Territory with a very large land holding and highly prospective assets. And joining me right now is Managing Director Alex Underwood. Hello, Alex.
G'day, Tim. Great to catch up.
It's wonderful to see you, and it's very exciting. Please just go through where Empire Energy Group is at right now with this marvellous asset up north.
Yeah, so we have a very large holding in the Northern Territory's Beetaloo Basin. The Beetaloo Basin is being demonstrated to be one of the world's most prolific shale gas basins. It contains over 500 trillion cubic feet of gas in place. Empire has over 29 million acres of land under lease in and around this basin. Over the last few years, we've kicked off an exploration program that has delineated a total prospective resource of over 42 trillion cubic feet of gas and a total 2C contingent resource or discovered resource of close to 2 TCF of gas with only limited drilling. We've also carried out horizontal appraisal drilling, which has demonstrated that these wells can flow at rates that we believe to be commercial. And we will soon be moving into a phase of pilot development, which will involve hooking in both the existing wells and some more wells, processing that gas through a facility we bought late last year from AGL, and commencing gas production and sales hopefully early next year.
Well, you've taken the words out of my mouth, because I was going to ask you about that pilot plant that you have acquired and constructing. What would be the throughput for that pilot plant in the foreseeable, say in 12 months' time?
Yeah, so we were thrilled with that acquisition of the Camden gas plant from AGL. So that's a facility that AGL has been reliably processing gas through in the southwestern part of Sydney for many years, and the fields that fed that plant are now coming to an end. And so we were able to acquire that plant for only 2.5 million Australian dollars from AGL. To put that into perspective, our estimate is that if we were to do a new build, it would have been tens and tens of millions of dollars. So a great deal. It's fit for purpose for the type of gas that we are looking to put through this facility. And highly encouragingly, this facility was built with a nameplate capacity of up to 42 terajoules a day. Our pilot project that we're looking to get up and running is looking to get up to 25 terajoules a day. And that's really around the capacity of the existing pipeline that goes through our permit.
Let's talk about for a second what a lot of analysts are saying is an energy crash or an energy crunch in 2 to 3 years. Is Empire able to, given all the right circumstances, able to kind of help with this energy crunch that we will be facing?
Absolutely. So the East Coast energy crisis, gas crisis, I should say, has become part of the normal daily conversation of Australians. We are all aware that gas supply is an enduring issue for us on Australia's East Coast. Gas is an irreplaceable part of our modern daily lives. So it's not only used to generate power, it's used for manufacturing, it's used for medicine, transportation. It's a critical part of our lives. And what we are seeing on Australia's East Coast is that there is this enduring supply challenge. The thing about gas markets is that if you don't have enough supply, you can only be, you might just be slightly undersupplied in a market, but prices can take off. And that's obviously not good for, cost of living and inflation and so on and so forth. If you look at the makeup of where gas comes from on Australia's East Coast, historically, the Bass Strait did a lot of the heavy lifting. So the Bass Strait has been an incredible economic gift for this country. I think over 7 trillion cubic feet of gas have been produced, a couple of billion barrels of oil, and that really was the energy source that underwrote manufacturing, particularly in the southern parts of the East Coast, but also the reticulated gas systems across our cities and so on. The Bass Strait fields are very much in terminal decline. I think last year gas production out of the Bass Strait dropped by somewhere in the order of 25 to 30%. We've also got the coal seam methane fields in Queensland, and those fields have been really starting to fill the gap of the Bass Strait fields. They've also underwritten a very significant LNG export industry for Queensland, which has created billions of dollars of value, hundreds and thousands of jobs. But the indications coming from some of the experts is that the coal seam methane fields of Queensland are starting to mature as well. I think it's also important for people to understand that the gas fields don't produce the way, say, a mine produces. So typically with a mine, you've just got a pretty flat level of production year after year. If you don't keep drilling gas fields, they're constantly falling in production as the pressure in the reservoir declines. And so we are facing a major issue. And, when we look around at the options of how we're going to fill this gap between demand and supply going forward, there are only really two major options available to us going forward. One is the Beetaloo Basin, in which Empire has a very significant holding, and we're right on the cusp of commercial production. The only other real option we have is LNG import, and LNG import is bloody expensive because you've got to buy at international world parity prices, which are denominated in US dollars. It's probably around, if you wanted a cargo of LNG, you're probably looking at paying 15 or 16 Aussie dollars right now. Then you've got to regasify it, you've got to find somewhere to store it. And so we believe that the Beetaloo Basin is going to play a very critical role in Australian East Coast energy security for a long time to come.
One of the major things that needs to be accomplished for Beetaloo to fully recognise its potential is a gas pipeline to the east or one to the north for export. But given that that may not happen for a while, is there a market right now, say you went into production tomorrow, would you have a market for your gas in the Northern Territory?
Absolutely. So the Northern Territory is heavily reliant on gas for the powering of its economy. So Darwin is solely powered with 2 gas-fired power stations. There are mines up and down the length and breadth of the Northern Territory that are solely reliant on gas. And the supply situation in the Northern Territory has deteriorated materially in the last couple of years. So Darwin is a major LNG hub, but all of the majority of this production that supports the domestic market for the Northern Territory has historically come from a field called Blacktip, which is located offshore and to the west of Darwin. That field is in very significant decline. It's a field that's producing only a small fraction of the contracted volumes. And so there is a desperate near-term need for more supply. There is, and we envisage that in our pilot phase, most of, if not all of the gas production will be in that NT domestic market. There is an existing pipeline that connects the NT to the East Coast called the Northern Gas Pipeline. That was a pipeline that was pioneered by Central Petroleum and Richard Coddy working with the NT government a few years ago. That's a pipeline that can move about 90 terajoules a day from the NT to the East Coast. Given the supply issues that are happening in the NT right now, our understanding is that little to no gas is flowing through that pipeline. So there is an opportunity for some gas to move east. However, the scale of the Beetaloo, the looming supply crunch on the East Coast means that there's an ample and very exciting opportunity for much larger pipelines to be built from the Northern Territory into the East Coast. And we've been working very closely with APA Group, who have made public statements to that effect, that they are interested in building much larger pipelines, potentially 500 terajoules a day or more, to connect in the Beetaloo to the east.
Let's look at your neighbours. Now, Empire's probably the largest landholder or second largest, or right up there at the top, but the smallest company. And on the other side of the coin, you've got Origin, you've got Santos, you've got Tamboran, you've got Falcon, all much larger companies, all in on this space. Now, there must be a reason for that. What is it?
Well, I think, first of all, if you look at the rocks, these are some of the most exciting shale gas rocks in the world. So, if you look at the US, I think there's been around 15 to 18 shale basins developed. Shale gas is now 70% of US supply. It's underwritten an LNG export industry for the US. They used to have to import gas from elsewhere, and now they're the world's biggest exporter. They've got the cheapest gas in the world. And in the earlier phases of this basin, a lot of the work that was done by Empire and Tamboran and Santos and Origin and others was really to understand, well, how good are these rocks? And what you do is you drill wells and you take core and you send it off to the labs in the States and you compare it to the other basins. And on all of the key geological factors, these rocks are truly world-class rocks. That attracted some of the bigger players a number of years ago, so Santos and Origin in particular. It has facilitated a great deal of investment in the basin over recent years. If you look at who the current active players are in the basin, it's really Empire and Tamboran are the most active operators. Tamboran's, as a company, has certainly grown in recent years as they have made some major acquisitions. They bought out Origin out of the basin. Their joint venture partner Falcon's a similar size to us, with also a very large and highly prospective acreage position. I think when you look at our size right now, I think it may look quite different in the not too distant future once we get through that proof of concept phase.
Certainly, it's a very interesting dynamic, the size of the valuation of your company compared to the valuation of the energy asset that you have and how critical that could be for Australia's future energy needs. Is there any proposal or opportunity to do LNG out of Darwin from your project?
So we've got a 3-phase commercialisation strategy. Phase 1, which is what we're very focused on right now, is 25 terajoules a day into the existing pipeline that goes through our tenement. That's proof of concept. We believe that can have a very material impact on our valuation and cost of capital. Phase 2, we're looking at around 200 terajoules a day, potentially a bit more, a bit less. That would involve sending gas through the new pipelines that would be built by APA to help resolve the East Coast gas supply issues that are coming. Then our 3rd phase could be significantly larger again. That could be 1,000 terajoules a day. And absolutely, we would be looking at export through the LNG plants in Darwin. There are currently 2 LNG terminals. One's operated by Santos. The other one is operated by INPEX. It's not particularly well known generally, but Darwin is already a major LNG export hub. I think it supplies Japan with around 10% of all of its gas demand. And the thing about LNG plants is that once the capital's sunk, it's actually quite capital efficient to bring in what we refer to as backfill, which is additional supply. So right now, Santos is developing the Barossa project, which is their next source of gas into their LNG export terminal. INPEX has indicated that they're currently producing from a field called Ichthys, but they're looking at starting to develop another field. They've also indicated that they're going to put another train, which is a processing unit, on that facility by 2030. both of these facilities have very significant capacity for expansion, and we foresee that there is a tremendous opportunity for LNG export, which could last decades and decades, given the enormous scale.
Given the size of your asset, absolutely. I mean, it's huge. Yeah. And, you know, I don't think it's not too bold to say that the thing's a kilometre thick. This rock that's bearing these hydrocarbons, and once that's liberated, it'll go, as you say, for decades and decades. And potentially that field is the answer to the coming gas shortage that Australia is going to face. So a very exciting time for Empire Energy. So for investors this year, what would be the key outputs for the company in the next, say, 12 months?
Yeah, so we're in a very news flow rich environment as a company this year. And it's really all focused on getting into production and the commencement of commercial sales by early next year. So in order to do that, we need to reach a final investment decision on this pilot project through our board in the coming months. We need to get regulatory approvals in place. We've done that successfully a number of times. We're about to submit those documents. We are also negotiating our first gas sales agreement. And I must say, it's a very good time to be looking to sell gas into this critically short market. And then obviously we need to come up with the financing for this pilot. As part of that process, we're actually running a farm out process at the moment to potentially bring in a joint venture partner. But in the event that we elect to maintain 100% working interest in all our properties, you know, we see ample opportunity for project finance as well. And then that would have us installing the gas plant that we bought late last year in the second half of this year, and then drilling a couple more wells with a view to commencing production and sales in about 12 months' time.
Wow. For investors watching, Empire Energy Group, ASX EEG. If you're a North American investor, the code is EEGUF. Thank you very much, Alex, for joining us today.
Thanks, Tim. Great to talk.